Well, good morning, Jaginder Rana here. The topic of the day is the Institute Cargo Clauses in Marine Insurance. Institute Cargo Clauses in Marine Insurance. Marine insurance has an essential role in domestic and international trade. It offers comprehensive protection against all the risks related to the shipping business. A marine insurance policy creates a safety net protecting you against the losses or damages caused to cargo, shipment, or terminal responsible for holding and transferring the goods from the point of origin to the destination. Now, marine insurance policies are available in different types. These include freight insurance, marine cargo insurance, hull insurance, etc. So, the responsibility of marine insurance in trade is determined based on the types of sales contract, including free on deal, cost and freight, cost insurance and freight, and free on board contracts. So, for instance, a CIF contract makes the seller responsible for arranging marine insurance. The scope of coverage or protection in marine insurance depends on the Institute Cargo Clauses. These clauses play a distinct role and precisely outline the extent of coverage provided for losses or damages that may occur during shipment. So, let us understand what these clauses are. So, Institute Cargo Clauses in marine insurance means they are part of marine cargo insurance that protects the cargo transit. They specify what kind of items in the cargo are covered in case of any loss or damage to the shipment. It is vital to note that the coverage can extend to several elements. So, from the cargo and the container holding it to the mode of transport used to ship the items. The clauses were introduced in 1982 by the Institute of London underwriters and have undergone various alterations based on the changes in global business risk and threat levels. The three main categories of Institute Cargo Clauses are A, B, and C. Each category outlines the extent of coverage provided, with Clause A providing the most comprehensive coverage and Clause C being the most restricted. So, Institute Cargo Clause A means ICCA, Institute Cargo Clause B means ICCB, and Institute Cargo Clause C means ICCC in short. The premium for marine insurance is also determined by the ICC included in the policy. You will be paying a higher marine insurance premium if you are availing of the wider coverage and vice versa. For instance, Clause C in marine insurance comes with basic coverage and thus is cost effective. You must assess the risk exposure of your business and trade along with your affordability before deciding on marine cargo insurance. So, an analysis of the price of Institute Cargo Clause A, B, and C is vital for determining the suitable level of coverage for a cargo insurance policy. So, the analysis enables businesses to evaluate the financial implications and advantages of different insurance provisions and coverages. So, what do Institute Cargo Clauses convey? ICC in a marine insurance policy conveys the following: the risk covered by the insurer, the risk excluded by the insurer, the commencement date of the marine insurance, the duration of marine cover, the expiry of the policy, and other standard conditions. So, what does Institute Cargo Clause A cover? ICCA in marine insurance provides the widest coverage compared to the other clauses. It is also referred to as the all-risk cargo insurance policy and covers you against the physical damage or loss of cargo due to any external cause or external causes. So ICCA covers all named and unnamed perils, enabling you to avail of extensive all-risk marine insurance coverage. As a result, its premium is relatively higher. However, the clause does not cover the damages and losses mentioned in the exclusions. Then what does Institute Cargo Clause B cover? So compared to ICCA, ICCB's cover in marine insurance is restricted. However, it covers more perils than ICCC. So there is coverage for accidental damage and thus you will need to pay a moderate premium. So besides, you can request additional coverage to protect valuable items. So the perils included under Institute Cargo Clause B are as follows. Damage or loss caused to the insured subject matter due to any of the reasons listed below, like fire or explosion, derailment or overturning of land conveyance, vessel or craft being capsized, sunk, grounded or stranded, collision of vessel, craft or conveyance with an external object apart from water, discharge of cargo at a port of distress, lightning, volcanic eruption or earthquake, loss or damage to the insured subject matter due to general average sacrifice, any extraordinary sacrifice or expenditure incurred voluntarily or reasonably during a maritime adventure to save the subject matter from perils. Jettison is also there, purposefully throwing overboard a part of the ship or cargo to rescue the ship or its cargo. It is also known as washing overboard. This is jettison. Jettison means purposefully throwing overboard a part of the ship or cargo to rescue the ship or its cargo. It is also known as the washing overboard. The entry of river or sea, lake water into the place of storage or container, hold conveyance when lift or vessel craft, or total loss of any package dropped while loading or unloading to or from the vessel or lost overboard. So the additional coverage offered by ICCB clauses 2009 compared to ICCC clauses 2009 are damages or loss of subject matter due to lightning, volcanic eruption or earthquake. So damages or loss of subject matter due to the entry of river or sea, lake water into the place of storage, container, hold conveyance, van, lift or vessel craft. Total loss of any package dropped while loading or unloading to or from the vessel or lost overboard. So then what does Institute Cargo Clause C covers? Clause C in marine insurance has very limited coverage. It mostly includes the perils expected during the carriage in the form of accidents. So the perils eligible for a claim under ICCC 2009 are listed below. These are damage or loss suffered by the insured subject matter due to any of the following reasons, like fire or explosion, derailment or overturning of land conveyance, vessel or craft being capsized, grounded, sunk or stranded, collision of vessel, craft or conveyance with an external object apart from water, discharge of cargo at a port of distress, damage or loss of the insured subject matter due to the jettison. Jettison means purposefully throwing overboard a part of the ship or cargo to rescue the ship or its cargo, but is also known as the washing overboard. And general average sacrifice, any extraordinary sacrifice or expenditure incurred voluntarily or reasonably during a maritime adventure to save the subject matter from perils. So the premium for ICCC is low because the coverage is also less. Now the question is, how are Institute Cargo Clauses A, B and C different from each other? The primary difference between the three Institute Cargo Clauses lies in the degree of coverage they offer and the circumstances in which the items are covered. Each clause specifies detailed parameters for what it covers and what it does not. But due to the difference in cover, the premium payable for each also differs. Then what do the institute cargo clauses excludes? But there are four categories of exclusions under the institute cargo clauses in marine insurance. One is general exclusion, then vessel seaworthiness exclusion, and war exclusions, and strike exclusions. So, institute cargo clauses, general exclusions means loss, damage, or expenses caused due to any of these reasons, that is willful misconduct of the assured, then ordinary wear and tear, ordinary loss in volume or weight, or ordinary leakage of the property insured, unsuitable packing or insufficient preparation done before the attachment of this insurance or by the assured or their employees, and making the insured subject matter incapable of withstanding the regular incidents of the insured transit, and nature of inherent vice of the property insured, and delay despite its cause being a peril the property is insured against, financial default or insolvency of the vessels operators, owners, managers, or charterers where during loading of the property insured on board the vessel the assured are informed or in the regular practice of business should know that such financial default or insolvency can restrict the usual prosecution of the voyage. So, use of any device or weapon employing nuclear or atomic fusion and or fission or radioactive force of matter or other similar reactions. So in clause C, packing also comprises stowage in a container, while employees excludes independent contractors. Clause F becomes invalid if the insurance contract has been assigned to the party claiming further in its